Welcome back to the Open Web Forum at CogX, curated by Fabric Ventures. To round out the day, we have two back-to-back panels on DeFi. The first of these will tackle the risks it might pose to sovereign monetary policy. And moderating for the next 40 minutes is Robert Hackett, senior writer and tech editor at Fortune. He co-chairs Fortune's Brainstorm Tech and Brainstorm Finance conferences, writes the Fortune newsletters Datasheet and The Ledger, and co-manages the Fortune 40 Under 40 list. Over to you, Robert.
Thanks so much. Hi, everybody. It's great to be here. And today we're going to be discussing DeFi, as mentioned, which means decentralized finance, and risks to sovereign monetary policy. In other words, what can cryptocurrency do, and how does that threaten central banks? Our panelists today are Agnes Budzyn, the co-founder and managing partner at Strategic Focus Investments, a VC firm, Helgi Egilsson, the chairman and co-founder at Monerium, a venture that's tokenizing fiat currency, and Dante Disparte, the chief strategy officer and head of global policy at Circle, a company that is responsible for a popular digital dollar called USD Coin. Thank you all for being here.
Thank you for having us.
Thank you, Robert.
Thank you for having me.
Excellent. So first off, a note to the audience. If you have a question you'd like me to ask the speakers, you can submit it over here in the chat. It's a thing called Stage Chat. I think I'm pointing in the right direction, but it'll be obvious on Hopin where you're looking. And I will ask it of our panelists at some point during the session, maybe toward the end or maybe throughout. So feel free to send them along as we discuss. And without further ado, let's kick things off. First, I thought maybe we could get some definitions out of the way. Specifically, DeFi is sort of a wonky word that people in the crypto world have taken up. Dante, what is DeFi? What does it mean? What is this all?
Yeah, so DeFi is really this fascinating frontier domain in the crypto markets where effectively you're leveraging the fact that cryptocurrencies allow for programmability and programmable money. So that on one hand, on the other hand, you're then allowing a whole range of financial instruments without the type of intermediation you would see in traditional finance to start to exist. So you could have concepts like yield farming, generating loans, and a whole host of other financial instruments that would exist without costly intermediation, I think is the real promise of DeFi.
And one thing that kind of sticks out at me, there are all these opportunities for high yield, as you mentioned, but the sort of things that you expect to get high yield from these days are usually things that are very risky. I mean, if you look at the least risky sort of thing, I mean, depending on who you talk to, kind of government treasuries, they yield effectively nothing, and in many cases, negative interest, which is a real racket in some ways. But DeFi is presenting these yields that are 5% up to 12% sometimes. It's outrageous numbers, the kind of thing that you might expect out of junk bonds. How much risk is there versus reward, Dante?
Well, like anything, I think one of the fundamental differences that cryptocurrencies and fintech more generally has compared to traditional finance is this concept of overcoming the weighted average cost of capital, right? That if an organizing principle for how capital enters the financial system is that the firms with the lowest weighted average cost of capital have a natural advantage, then cryptocurrencies, digital currencies, and fintechs that have a light footprint, don't rely on brick and mortar infrastructure, don't have that type of cost barrier to overcome. So I think, yes, the yields can be market besting, but we shouldn't treat them like it's not possible, partly because a lot of these programs are not organized in traditional ways. They're organized in code as opposed to in brick and mortar or traditional financial intermediation.
Got it. So really, it's this cost savings you're talking about that much of this yield can be attributed to. Agnes, you spent a lot of time over at BlackRock, which is a major asset manager. How much of a threat is cryptocurrency and this whole world of DeFi to sort of the incumbency, the kind of legacy financial institutions and Wall Street, as it were?
Oh, that is a very interesting question. Thank you for that. So I think, when you look at finance and traditional institutions, they grow and develop and adjust. And like every single business. The question is, are they going to do it fast enough to keep up with this, blockchain cryptocurrency space that is pretty much growing and moving in, in the light speed. And you can see some of the institutions like State Street and BlackRock and JP Morgan and Credit Suisse and others that are, getting into, into this new world of, digital currency, stable coins, exploring, DeFi, maybe not in such a depth as, we are doing this in the blockchain space, but slowly they recognize that this is a new asset class and they recognize that they have to be adapt or, things will move forward without them. And I think that's a circle of life almost for every single business.
So yeah, it's definitely the circle of life. And we mentioned these private companies that are having to contend with this, but really the subject of this conversation is also, it's about kind of the nation state and central banks and their ability to get their hands around it. How much of a threat is this nascent world of cryptocurrency to those ideas, to central banks in particular? Agnes, if you wouldn't mind elaborating.
Oh, absolutely. So I actually thought about, as I seen the topic, I kind of thought about this a little bit more and more because there's a very interesting kind of, I don't know if the oxymoron is a good word or not, but decentralized finance is all about decentralization. Central banks are all about centralization, and that's the underlying model for those two, areas. And it's extremely, and I was kind of thinking through it saying, how could you pretty much not even merge those two, but bring them close enough so they can work together and they can, figure out if there are synergies to move forward in the way that we are growing together and not creating frictions and fighting with each other in any way. So I think that this is going to be a challenge for central banks, aka regulators. We should never look at the regulators as a trendsetters. They are not trendsetters. They are followers. They are are looking at things, how the new things are growing and changing, and how they can provide some kind of, protections or some kind of barriers in a good way, good meaning of that word, to make sure that our cryptocurrency / blockchain world is growing. Because at the end of the day, the way I think we should look at the central banks and regulators, they are not our enemies. We should work with them because they are in the business to protecting the ecosystem of finance, the ecosystem of users and things like that. So we should figure out a way to work with them so our industry can grow. The better we're regulated, I think the faster and the better we can grow. Because when you have a clear-cut regulations in terms of taxes, policies, are we recognizing certain currencies as a property, as a currency, as a token, as a utility, so on and so forth. The better the definition, the clearer the definition from the regulator there is, I think the bigger and the faster the ecosystem will be growing, the more users there will be, because people will be feeling very comfortable with it. I hope that answers.
Yeah, Agnes, you're painting this picture, this optimistic picture that these two worlds can coexist in harmony, that they can work together, and it makes me wonder, so you think that they can, they actually can? Because central banks, it's got the word central in the title. It's centralization versus DeFi, decentralization. It seems like they're opposing forces, like they're just kind of irreconcilable differences between the two. We recently had the Bitcoin Miami conference in Miami, and you see these people talking about, down with the Fed, basically, the central banks are destroying society is almost what they're saying.
So I grew up working with regulators and central banks during the financial crisis, where pretty much everything was wonderful and then everything went to hell. And, and there was pretty much a desperate, search for somebody to come and help. And that's where all the, Fed and central banks and things like that came to place to prop up and help the financial system to go back to whatever that normal was. But for me, I'm a big fan of stablecoins, and I think as the world progresses, I think a lot of central banks, regulators, and governments are going to go into cryptocurrency world with that with the stablecoin in mind. And I don't know if there is for now, I don't know if there is a perfect recipe or formula how these two worlds are going to be playing. But when you are building economy, when you're building a country or whatever ecosystem you're looking at, there has to be, some kind of responsible party that is going to take responsibility for things that are not always going well. And actually right now, when we are looking at some of the spaces of a cryptocurrency and DeFi, there is a need for, a little bit more accountability. There is a need for a little bit more of a clear understanding or clear explanations of rules, because if some of the spaces are chaos because they are young and they are new. And I'm not sure if Fed or central banks are the entities to do it, but I think maybe together we can grow and figure out a kind of a way to make this work and grow, because this has to go. In order for cryptocurrencies and blockchain to be a powerful technology, it has to go very much mainstream. Mainstream means retail investors. The retail investors want security. They want comfort zone. Looking even when you guys were talking about a little bit about DeFi and staking and farm yielding and stuff like that. And a lot of people that are talking to me are asking me, well, if I go and stake my Filecoin or Ether, is this insured? What if somebody goes and hacks into the system and takes it all? Who am I going to sue? Who am I going to go and complain to? And the answer is I don't know. Is there anybody there to do so? No, because it is a decentralized system. Should there be somebody that has a superbly high level overview where there is some kind of form of accountability for hacking into somebody's system? There should be. So it's a very gray line for now, but I think we should start thinking, I'm assuming a lot of people are thinking around those areas, because that's where human nature, that's where humans want. They want comfort, they want assurance. And I think that's where there's a lot of work that we'll need to do.
You brought up a number of fascinating topics, everything from stable coins to sort of the way that regulations might apply to decentralized projects. And who do you kind of call when things go awry? It's unclear. You've got to take it up with the blockchain, basically. But you also mentioned the financial crisis, and I thought this would be a great pivot point to throw it over to Jan, because you are from Iceland and you previously advised the Icelandic Central Bank. That seems like a kind of something I would love to hear about. The 2008 financial crisis hit Iceland particularly hard, and it makes me wonder, how did that inform your thinking about all of these topics?
Yeah, well, thank you. That's really interesting segue into this topic. So from my point of view, the monetary policy is not perfect, far from it. And actually, since you mentioned the Icelandic financial crisis in 2008, a big part of the reason why we had this boom and bust was because of the monetary policy. And why do I say that? Well, it is because the way that monetary policy works is that the central bank is seeking to influence the economy through the banks and use the banks as intermediaries. So the central bank is affecting the price of money, and then the banks basically offer lending to the customers. And through new lending, then you increase the money supply. And one of the problems that we had in Iceland was that there was too much money basically created by banks. So, and the topic of this session here is, can it be argued that the power that is given to individual and protocols on a peer-to-peer level to control their assets and economic activity, if it is a threat to central banks? And coming from Iceland, when you saw that the monetary policy could go wrong, and you understand that it's not perfect, it can be improved. And I think basically the big opportunity here is to take the good things out of DeFi and improve it. DeFi is not perfect, but monetary policy is not perfect either. So, and why is it potentially considered as a threat to central banks? Well, it is because in the DeFi world, you basically give the power to people to borrow and lend money more and more directly between each other. So this means that borrowing and lending is not going to go through banks, and that means that the central banks are less likely to be able to influence the economy through the banks. But first of all, this is not entirely a bad proposition, and secondly, then this is already happening in another area in finance, that is when you have a mutual fund, which is basically lending and money to companies and individuals directly. It is a similar mechanism as we see in DeFi. So I think it's the big opportunity for DeFi is basically to increase financial stability. And I say this as a former central banker. And the big opportunity is basically to mitigate or make the risk of too big to fail banks, less threatening to the economy, shall we say. And how do you do that? Well, Agnes was mentioning stablecoins. We at Monerium, we are offering just regular money on blockchains. It's called e-money. It's in Europe. It's a 20-year-old legal framework. It's proven. It's basically the same legal framework that is controlling when you hold your money on your debit card. Now, the only difference is that you hold the money on blockchain now. And so basically by offering individuals to hold their money as e-money tokens, just regular money on blockchains, you are basically unbundling many of the functionality of banks. And you don't have the problem of bank deposits because, you are in control of your own funds. You are not contingent on the banks to run the payment system. The payment system is basically the blockchain. And then you have all these interesting banking functionality in DeFi as smart contracts, automatic, atomic swaps, and so on. So basically, you're unbundling a lot of the functionality within banks, and in that way, you are making them less systemically important. And I think you solve a lot of problems. So I think it's essentially a big opportunity to use this technology to improve the system. That is what we should be aiming at. Yeah. And I just one thing to add, because Agnes was mentioning that we are in a gray area. It depends where you are in the world. In some areas, like in Europe, we have a pretty good legal framework where you are taking care of consumer protection and so on. And as I said, Monerium was the first company to get a license to issue just regular money on blockchains.
Jan, I want to underscore something you said. You said that you're getting into this because you are looking to improve financial stability and economic stability. Now, that seems to run counter to the conventional wisdom around cryptocurrencies, where you think of Bitcoin, you think of the wild price fluctuations, price swings. People call it playing a casino. And that all this stuff could ripple out and just, crash prices across the board in the crypto universe. All that sort of thinking around what cryptocurrencies are is so wrapped up in danger and instability, it seems. So what does this say about how it could actually make things more stable?
Well, the way to make it more stable is basically, as I said, you can basically facilitate what is called in the US stable coins, or in Europe as e-money or just regular money on blockchains. And in that way, then you enable people to hold their funds and be in control of their funds. They don't need to basically deposit it as a bank deposit. So that means that you don't have the moral hazard of the banks, and you don't need to have a central bank as a lender of last resort, because if less people are holding bank deposits, then there's less danger of people losing access to the bank accounts. So you basically you create the system, and those two systems, the old banking system, which is based on the fractional reserve system, is going to coexist with the new, shall we say, stable coin e-money token system, which is, could also be termed as a narrow bank model. And then competition will win. You know, what basically solution is going to be better and better received. You say, you know, Bitcoin is volatile and so on. So what? I mean, you have a lot of assets which are volatile, and I don't.
I'm sorry to interrupt you, Jan, but also, like, we're talking about Bitcoin being very volatile, but if you look at the currency of Turkey or Venezuela, the volatility is even higher than actually volatility of Bitcoin when you start comparing it, or is on par with it. So it really depends which part of the world you're talking about. As Jan actually correctly pointed out, like, European countries are way ahead in regulation, Singapore, but when you start looking into India or others, they are a little bit behind. So the same with the fluctuation of the cryptocurrency, depending to which country in the world or which currency you're comparing it to. Because if we were talking about to people that are somewhere in Africa, Venezuela, Iraq, or some kind of other, or even Turkey, actually a Bitcoin is, or Ether is their actually stable currency. It's their rescue currency where they put the money in so the inflation doesn't kill it. Sorry, Jan, please go ahead.
No, that's fantastic. So I think the fiat money in general is just so powerful that, you know, and competition is a positive thing, and fiat money on blockchain is just going to be much better.
Excellent. And just a reminder to the audience, if you have questions, submit them through the chat and I will ask them of our featured speakers today. You know, it's interesting you mentioned all these other areas in the world where they could benefit from a cryptocurrency, places with very high rates of inflation. And we recently saw a wave of interest across Latin America, kind of kicked off by El Salvador, the small country in Central America. It's kind of a pipsqueak on the international stage, but it is a major validation for cryptocurrency and how other countries might get into it. Agnes, how do you receive that news of El Salvador okaying Bitcoin as legal tender in that country? Well, I think
yes. So look, it was a very interesting move. It was very, very exciting, obviously, for a cryptocurrency space. You know, I would like to see a little bit more of a, you know, a little bit more kind of, I'm looking forward to see a little bit more into how El Salvador is planning to actually put this in motion. Because, you know, saying that this is happening is kind of one thing, and kind of figuring out how to do it in a safe way and how to actually, you know, logistically do it, that would be a very interesting way to do it. But overall, this is a really positive thing, and it's a good thing for different countries and different financial systems to kind of test some of the use cases to see what works for them, how it works. Does it have actually a good future for them or not? So I think that's great.
Dante, you're a former top executive of the Libra Association, this initiative that was kind of formed by Facebook and a bunch of other companies to create a stablecoin that would, you know, be globe spanning. And part of the reasoning behind that was to give people a way to store their wealth in something that wouldn't lose its value so much over time. What are the prospects for that? I mean, you've since left the Libra Association. Is that going anywhere? What's going on there? Yeah,
well, it's a journey I would have done, frankly, all over again, because I think probably more so than any project in the space, the advent of the Libra project really put a bright light on a lot of the issues we've discussed so far, and frankly, a lot of the very points that Jan so ably and Agnes also ably described. First, you have a world with 1.7 billion people without access to a bank account. You have roughly a similar number who are on the margins of the financial system. Yet 1 billion people around the world have a low-cost internet-connected mobile phone. And I think the promise of connecting those dots remains unfinished work. So the same way DeFi as an instrument and as a payment instrument can empower new models of programmable money and programmable finance on the internet, stable coins, digital currencies, even this concept of reserve-backed or basket-backed digital currencies that look and feel like the special drawing rights at the IMF have a place in the global financial system. What more and more central banks are starting to realize is that, this concept of central bank digital currencies is a big abstraction, and that even in a world in which they were widely accessible, you still need a vigorously competitive, global, interoperable internet of value to exist to pull more people into the perimeter of financial services. So that's an activity, candidly, where past will look like the future. All historical innovations around the movement of money and value, whether it's the Visa network, SWIFT, ACH, all these other networks, frankly, foreshadow what we will see with blockchain-based payment systems and public blockchains. In Circle's case, we power the fastest growing digital currency in the world, USDC. But we're making a design choice of building on public blockchains so that there's much more accessibility, and it's a developer first model as well, that will start to promote innovation, inclusion, and candidly upgrade financial integrity and crimes compliance around the world, because those are the key blockers to a more equitable global financial system.
You've got this grand vision that you presented about programmable money that's going to know no borders, and it's incredibly intriguing, and it's sort of a utopian vision that I think people would like to see come to fruition. But Libra itself, I mean, it's changed its name to Diem, and it has also walked back its aims quite a bit. I know you're no longer there, but I wonder, is the timing not right now? Like, how far away until we get that sort of dream vision that you have just presented to all of us?
Frankly, it's a great question, but and this, to apply a purity test to a novel industry that is 11 years old, that the traditional sector has failed, I think is the disconnect. So step one, let's acknowledge that blockchain technology, perhaps different from the internet, is an augmenting technology and not a disruptive technology. And so trusted players are starting to emerge that are increasingly well regulated. The technologies themselves are now in a third generation. You have all of these emerging, blockchains, Solana, Algorand, Stellar, and many, many others that are really starting to fulfill a job that cannot be fulfilled using traditional infrastructure and traditional brick and mortar banking. And countries from Singapore to the United States and Europe for sure are starting to realize the opportunity of providing regulatory clarity and certainty around this industry that's drawing hundreds of millions of dollars and billions of dollars of capital, creating thousands and thousands of jobs, and frankly, are also going up market, empowering traditional incumbents and financial services firms to enter this space.
Excellent. Dante, you're also a part of the World Economic Forum's Digital Currency Initiative. You guys recently put out a paper that was several dozen pages long. What were you chatting about there? Obviously, it has a lot to do with the intersection of DeFi and regulation, but maybe you could kind of concisely summarize the bullet points or what you found as a result of working on this with so many people, with so many different interests and stakes in this world.
Sure. Well, I am a member of the World Economic Forum's Digital Currency Governance Consortium. I did not directly contribute to that paper, although I follow everything the forum produces insofar as blockchain and technology are concerned, mostly so that I can call Sheila Warren my boss. Most of my work actually with the forum is on this question of should central banks launch central bank digital currencies and sort of compete with the two-tiered banking system, trying to effectively out-China China, or should we have a posture in which free market innovations around stable coins, around public blockchains can coexist in this space? So I would imagine the DeFi report is going to be a very sober report. Much of the work that the forum are doing on these issues are really trying to up-level the policymaking conversation. They have a unique convening power. And so I'm glad to continue contributing to that line of work with the forum.
Let's talk about China. China is putting out a digital yuan. They've got it in pilot tests in many cities across the country, and they are giving away money to incentivize people to take it up. How much of this is a threat to the Western world?
Well, I'll take a first stab, and then I'll defer to my colleagues who can, of course, add an opinion here, a deep one. Candidly, I have an article coming out pretty soon that describes a model in which the United States is not losing the digital currency space race, partly because it's a space race I would be remiss to see transition from a free competitive market that is evolving. There's $100 billion of digital currencies and stablecoins in circulation today, and it's a number that's only growing, versus a model that is centralized and effectively transitioning to the taxpayer, a science experiment. And so I think the movement of money, the future of money, has to continue being built with first principles in mind and around competition that is very open and vigorous. And so enormous concerns, even recently reported on in an Economist article, on some of the domestic concerns the Chinese experiment is evidencing. But I don't think we're losing this space race. I actually think if we get it right and we continue building first principles, in the long run, this would have proven to be a good era for global financial access and innovation.
Excellent. It's an interesting point of view because a lot of people do fret that the Western world is falling behind. I'd like to get Jan, it looked like you were going to jump in and say something. And given your experience with central banks, you'd be pretty well poised to comment on China's initiative.
No, I absolutely agree with Dante. I think China is not a threat to the US or Europe in this sense. This is basically a centralized system. It has been argued that this is more about control, the government control over its citizens. I think it's important for us to just emphasize, permissionless development, open platforms, inclusion, free competition, and central banks to take over and try to basically lead innovation, business innovation, and technology. I don't think that's the way forward.
Got it. So we've got two people who are pro-private sector innovation. Agnes, where do you stand on this? How big of a threat is China and the digital yuan to the rest of the world?
So I agree with both of my colleagues because I look at what China is really doing. It's more of a tracking system than really anything else. So yeah, definitely, I think it's going to be a big component because obviously China is a large economy and has there's a lot of money there. But I think between Europe and US and other parts of the world, I think as the systems start growing, I think it's going to be very almost similar to hard currency. Just imagine digital dollars. Will that be going to be a digital euro? And these currencies are going to be kind of bringing with them, the fundamentals of where they're coming from. So what you will understand that if you're using digital yuan, you will know you'll be able, everything that you do with that will be traced and tracked and recorded and kept. If you're going to do this with digital euro or dollar, it's going to be very different because the political and economic systems are just different. So I think it's going to come down to those fundamentals.
Sounds a little bit Orwellian that it is a tracking system more than anything else. That sounds a little bit worrisome, and I hope that it doesn't end up that way around the rest of the world with central bank digital currencies.
Well, and if I could jump in there just briefly, Robert, because I think this point is really, really powerful, right? The notion that to the right of lawful, the use of money should be as free as possible in a free society. And right now, our presumption of trust in the system puts the burden of proof and the burden of trust on the end user. And that, frankly, is one of the most powerful ideals about the blockchain sector overall, is this concept of empowerment, creating a level playing field where every actor in the system has collective witness. And there's enormously powerful but yet unexploited opportunities in financial crime compliance, privacy preservation, authentication, identification, and then assets to live in a digital form. The only admonishment I would make is that a digital twin of a fundamentally flawed instrument is a fundamentally flawed digital twin. We live in a world with 50% of the world's populations are subject to hyperinflationary domestic currencies, not worth the papers they are printed on, and not interoperable at global scale. And so that's the caution I would also say about central bank digital currencies in these experiments is that, you have to build on top of trusted institutions. And so this is the Western world's fight to lose. And we would lose it if we try to shut down what the blockchain industry fundamentally represents.
Dante, there are a number of projects going on around the world, a lot of exploration. More than 80% of central banks are experimenting and researching central bank digital currencies. And the Fed is actually expected to come out with a paper this summer. What are you expecting from the Fed? And are any other countries getting it right? Is anyone doing this the way you want to see it done?
Well, some countries, for example, Sweden and the Swedish Riksbank are answering domestic environments, right? A CBDC fundamentally is a domestic instrument, and every central bank has to, of course, answer what is the reality and the economic reality in their country. At the same time, many countries, including the United States, cash and physical fiat money is growing in circulation. And so what you want in any economy as a risk and resilience person is resilience in payment systems and deep optionality in payment systems. Almost this concept of an omni-channel market environment that is rules-based, that is technology agnostic and indifferent, and allows for the whole totality of payment instruments and settlement instruments to exist, including blockchain-based payment systems that are much more open. My suspicion is the Fed is right, as are other big central banks, to be cautious about not trying to win a space race, but to get it right over the long term. And I think getting it right is a world in which stable coins, central bank digital currencies, or access to the Fed rate and the trading windows might coexist just perfectly, because a stable coin exists at the retail level and at the consumer level across public blockchains, whereas a CBDC will fundamentally exist within centralized infrastructure or technology.
Excellent. We have a little bit less than 5 minutes left, so I want to get through these next questions pretty quickly. We have a question from the audience that I'd love to throw to Jan, which is, what role do you want to see from governments in regulating and supporting DeFi?
It comes down to the role of central banks. Like Dante was saying, I don't think that central banks have a big role in retail CBDC. I think, however, that central banks could have a big role in wholesale CBDC, basically backing projects and the private sector. So there is actually, for example, the Bank of England has issued a report basically promoting and suggesting that the private sector and the public sector work together in that sense, that the central bank is basically, shall we say, supporting stable coins or e-money tokens with their wholesale CBDC. And I think that's a sensible role for government. A role for government is also to make sure that the legal structure is okay, make sure that the consumer protection is in order, make sure that the players, they play by the rules, make sure that, if anything goes wrong, your funds are safe, and so on. And this is basically, we have a fantastic legal structure here in Europe. I say it again and again, and I think this is something that the world should look at and maybe consider to embrace it, because this is nothing new. This is just this is a new way of putting regular money on some technological platform. Blockchain is just another technological platform. It does other things, but fundamentally you have to make sure that the consumer protection is there, and these are same across different technical platforms.
It sounds like there is this tight partnership between government, in your view, of the future. Agnes, where do you stand on this? And again, we've got less than 5 minutes left, so if we can keep it tight, because I've got one more.
No, so this is going to be quick. No, I absolutely agree. I agree with everything that Jan said. I think, like I said, blockchain is new technology. We can replicate and use a lot of different things that were created before. Some of them will need updates, upgrades, obviously, because the world is changing. But after that, we shouldn't be reinventing the wheels in in some of the policies. We should use as much as we can and just add the layer of technology and how to protect ourselves going forward.
So we've got just a few minutes left, and I want to ask a question that is, it's two-pronged. I'll give you the option to answer one or the other. But A, give us a prediction for over the next year what's going to happen with regards to central banks and digital currency. It can be that more countries will adopt Bitcoin as legal tender or something else. Or tell us a technology that is underappreciated that you think is going to be transformational. And please, as specific as you can, like if you can cite a specific blockchain that you think people aren't talking about enough, or a specific project or venture that isn't getting enough attention. And no talking your own book, if you wouldn't mind. Agnes, we'll start with you.
So for me, I think the underappreciated spaces are social tokens. So for example, any platforms that are like, Twitter or, YouTube, TikTok, Instagram, anything like this, I think there's going to be some form of social token, social currencies where you can go and reward your users, your fans, things like that. So I'm a very big fan of this social ecosystems in social platform spaces.
I'm fascinated by that too, sort of celeb coins, but hopefully everybody will benefit from them.
Absolutely.
Jan, how about you? Give us a technology or prediction.
Yeah, my prediction is that my feeling is that fiat money is not going away anytime soon. I think the central banks will support the private sector in basically issuing stable coins in the US or e-money tokens in Europe and different forms in other jurisdictions. And I think that will unleash a lot of very interesting, positive functionality, which is going to make the world both better, fairer, and I think we should just embrace it and support it.
Excellent. And Dante, we'll wrap up with you. We've got less than a minute left.
In less than a minute, my prediction is less to do with technology and more to do with public attitudes, which is that while on the one hand, crypto and blockchain may not be right for everyone, I think this is the year we enshrine everyone's right to participate in the space. And that will become part of a regulatory regime and part of just a broad financial ecosystem that completes the financial system rather than competes with it.
Fantastic. What a fantastic conversation, all of you. Thank you all so much for joining. I mean, what could be more interesting than sort of the very existence and future of the nation state as a concept, and what money is going to look like in the future. So I learned a ton from this, and I hope our audience did too. Thank you all so much for tuning in.
Cheers,
Thank you so much.
What a great roundup of the direction this magical ecosystem is moving and the freedom people experience being unshackled from the old system and becoming our own banks. There were so many fantastic sound bites from all the panelists, but I really think Yuan epitomized my feelings early on when he said DeFi is unbundling the function of banks, and we can use this technology to improve the system. Thank you so much again to Yuan, Agnes, and Dante. And if you're interested in social tokens, by the way, check out the panel I'm moderating on Wednesday called Decentralized Media, because we'll definitely chat about those. Now, shifting gears from risk to sovereign monetary policy to going beyond arbitrage and trading. Our final panel of the day will start in 20 minutes, and you won't want to miss it. This is the Open Web Forum at CogX, curated by Fabric Ventures, and we'll see you back here in a moment.